Now, before I get into the 3 actual examples, I want to point out that you're going to notice that the stock price in each example actually goes down in price. However, I've done this for a very specific reason, to show that no matter whether the stock price goes up or down, options will still allow you to make money. So a very powerful thing, as it affords you just massive flexibility. Stock price goes up, great, you can make money. Stock price goes down, great. With options, the way they function, you can still make money. So for the first example, I noticed this chart, and it was currently trading right around the area of 119.50. And at that time, I thought, you know what? I think the price is going to go down. So what I then did was went and I bought options for $2.03. Now, as it turned out, the chart led me to a proper conclusion, and the stock did fall down in price. In fact, it fell as far as 117.46. And this was a percentage of 1.7% on the decline. And now, in order to get involved, remember, that's what options, are allowing us to get involved with. I would have needed what? $119.50, right? The minimum needed, I could have bought 1 share. However, think about that. Making 1.7% on $119.50, and then you have all those commissions. I mean, it makes sense. That's just not a very rational, not a very logical thing to do, because the commissions are going to eat away at everything. However, let's look at the options. By the time everything was said and done, the options had gone as high as $3.55. And that was a gain of 75%. So hopefully you're starting to see the difference now. And to get involved, what was the minimum you needed to get involved? $203. Sure, a little bit more than here, but what is that? A difference of about 80 some dollars. So for $80 more to get involved, you could have an opportunity at 75% gain on $203. Not too bad. Again, look at it like this: making 1.7% on $119.50, or making 75% on $203. Think about that. Options, very powerful, and all you needed was $203 in your account. I really want to drive that home, because that really shows how options function. For our second example, once again, I found a stock and I thought, you know what, that chart looks like it wants to go down in price. So at the time when I saw it, the stock itself was trading for $146.80. So because I thought, you know what, I think that's going to go down, and I went and bought some options. And for these, I paid $2.80 for the option. Now, by the time everything was said and done, once again, the chart led me and was right. The price did indeed fall. The stock had fallen all the way to $137.60. And a little side note with this one, I actually alerted it to our chat room. So kind of other people had the opportunity at it. So this was an actual chat room alert too that I issued. But it dropped down to $137.60. So that was a decrease of 6.3% on the fall. Now, how much money would you have needed to get involved? Again, if you're just buying 1 share, you would have needed $146.80. So, making 6.3% on $146.80, maybe you'd finally be able to cover your commissions, depending on your broker. Maybe, just maybe, you would have broke even. So again, not very ideal. However, let's look at the options. So by the time everything was said and done with the options, those had gone as high as $7.30. So looking at things from a percentage standpoint here, that was a 161% move. And again, the money needed to get involved, $280. So sure, a little bit more than that, but let's see, make 6.3% on 146, or make 161% on 280. I think that's pretty impressive. And also keep in mind that these were all day trades, meaning it happened in the same day. 75% in one day, 161% in one day. Actually, it was really just a few hours, but for argument's sake here, just know that this was all happening in one day. But now that leads to the question of, well, I can't sit there and day trade stocks, so I'm not going to be able to day trade options either. Fair enough. It works for swing trading too. And that's where we are leading for our third example. So again, I noticed this chart and I thought, hey, that price looks like it wants to fall. So at that time, the stock was trading for $115.75. So because I thought the price would fall, I went and bought some options. And for these options, I paid 63 cents. Now, by the time all was said and done, the chart once again had led me to a profitable decision and thinking, you know what, it looks like the price is going to fall. It did fall, and the stock itself fell down as low as 112.78. So this downwards move for the stock was 2.57%. And again, to be the minimum money to get involved if we're just buying one share was $115.75. Let's take a look at the options. Now this was a one-night hold. So I bought one day, and then another day passed. And the next day, so a swing trade, we're not looking to buy and sell within the same day. The next day, the option had actually gone up as high as $1.76. So this led to an overnight swing trade presenting an opportunity window of 179%. Now the money to get involved here, $63. If you don't have $63 in your trading account, you probably shouldn't be trading. So again, in this case, it actually costs less, but yet you had 179% versus 2.57%. So keep all this in mind. This is how options work. Doesn't really matter anymore. It doesn't matter at all, really, in terms of the price of the stock, because with options, you're going to get involved. Now, of course, options, if you are a gambler and don't have a strategy, don't have a plan, can be very risky. There's no doubt about that at all. So just want to give that up front. But it's very real. It's very possible to make good sized gains. I'm not saying you're going to make 100% every time or anything like that, but just understand that options not only allow you to get involved, but they can present some very nice opportunities.